In this video, you will learn how to find the best investment opportunities for the long-term US stocks. Particularly, we have a huge list, actually 14,000 stocks to choose from. Read disclaimer right here because it's gonna be like a very interesting video. And we are using the stock screener trading view. We have a special discount made for you available in the video description below as well. What we have here is like a huge list, obviously, and we have to reduce that. So the stock screener has filters at the top, so you can reduce that number. So the first critical filter I would say is just the market cap. So obviously, in my opinion, it's like it's better to avoid like very penny small cap stocks, penny stocks that have no value. So in that sense, if we reduce that number by just applying a filter of 2 billion market cap and above, we just reduced the number from 14,000 to 4,000. So that's a huge reduction. Another key filter that we should apply, and this is very basic stuff, but it works. At the end of the day, it works. You're gonna see like important, very important stocks, huge names right here that perform incredibly well over the last decade because of that. Because by just applying these filters, you see them. So we're gonna apply a year today. No, we're gonna apply 5 years of performance, but we don't know exactly what's a good performance. Obviously, it's we had to choose the positive performance, but how much? So we're gonna go to the S&P 500 and we're gonna see the performance of this index over the last 5 years. So the theory is like you have to choose something that performs better than an index. So currently, the index over the last 5 years, the S&P 500, has performed nearly above 90%. So in that sense, we go back to the stock screener. And we're gonna choose a manual setup, and we're gonna apply a value of above 91%. So we click on apply, and we just reduce the number considerably. It's like now instead of 4,000, we have above 1,000, which is like huge reduction. But still, it's a huge number. So we need to continue to reduce that number. The dividend yield is not that important because they are incredible growth stocks. I would say they perform better than dividend stocks over the long term. But obviously, we need to see something better. So we're gonna apply revenue growth. Another basic stuff, another basic setup in that sense. So we're gonna go right here, annual year over year, and we're gonna select, for instance, like a revenue growth or 10% below a manual setup, I would say. So for instance, if we go right here and select 20% and above, the list is gonna be reduced to 135. In that sense, you can edit this parameter and you can select something like 10% and above. But the idea is like for the long term, investing in stocks that have like a constant growth every year is a good idea. It makes sense. But still, obviously, this can vary. There are, for instance, you can see here Nvidia, it is one of the stocks that is present right here, and then obviously the performance is over the last 5 years. That doesn't mean that Nvidia is performing well this year, but in theory, for the long term, it works. So here we have the list, 135. We can reduce that number even more. So we can click on the plus icon right here, add a new filter, and look at the options that you have. You can select the exchange, you can select the index, the target price, symbol type. There are a lot of different options. But obviously, what we want is like to find the best investment opportunity. So maybe we can apply a MACD that is in oversold territory, or even better, an RSI. This is very simple indicator to analyze. So we're gonna go and find the RSI, which is the relative strength index. Let me see if I can find it right here. And we're gonna select like an oversold territory. In that sense, we're gonna add the filter right here, and we're gonna apply an oversold territory, which is 30 and below. And we click on apply right here. Interestingly, also obviously we had to select the time frame, and we have different options: 1 week, which is the long term, even the monthly time frame, which is very dramatic. But we don't see the results. So look at that, where we have just reduced the number incredibly, you know. So from 14,000, we just have two when we select, for instance, the weekly. And then these are the ones that we have to analyze closely. So we're gonna open each one of those, only two. Obviously, we apply different parameters, we get different results. In this case, it's like the growth is huge. You know, it's like 25% growth over the last year. So that's a huge number. I would say 10%, 5% is even, it's okay as well, you know. So we can edit that afterwards. We're gonna analyze right now these two stocks, and we're gonna see exactly if it makes sense to invest for the long term or not. So here we have the Traders Desk, you know, in this example, a real example, I would say, and we apply the RSI MACD, and you can confirm that it's in completely oversold territory. We're talking about like levels that, you know, that we're seeing back in August 2020, you know, so obviously this is completely oversold. And then we go to the net income. And wow, I mean, it makes sense. You know, it's pretty basic stuff. It's completely oversold, even though it is making new highs in the net income, which is a very, very interesting stock in that sense. What are the forecasts right here? Because this is like very interesting to see. And the forecast of this stock, yeah, probably the way is behaving is because of the estimate that we have right here. But I would say it's very similar to the one seen back in 2024. You know, like the first quarter 2024. Right here we have an estimate of 0.25. The estimate back then was 0.22. I'm sorry. So obviously this is not the best quarter for the company, and this is probably one of the reasons that is underperforming. But look at what happens afterwards. And look at what happens in the annual EPS forecast. I mean, that's huge. So this is the type of stock that you need to find, you know, like these opportunities. Because at the end of the day, right now, the stock is correcting, you know, you can clearly see the stock is correcting hugely in that sense. But that doesn't mean that it's going down forever. I mean, obviously the quarter that they're going to have right now is not the best one, but they're gonna have better quarters than the previous ones. So for the long term, it's very, very interesting. The other one, which is Elf Beauty, we're gonna see actually the same parameters. We're gonna apply the RSI and MACD. We're gonna see that it's in, yeah, definitely in oversold territory. We're gonna go to the net income as well, and you can clearly see that in this case, yeah, the net income has been, you know, yeah, we can see a reduction right here in the last 2 quarters, which is not good. But still, we're gonna see the forecast again for this one, in order to see it's just something that is gonna happen once, or maybe the forecast is gonna be worse for the long term. It's something that you need to analyze. And in the forecast, what it says is like, yeah, it's not a good quarter right here. Here you have a couple of quarters that are not good. But for the long term, I would say it's very good. Look at that. You know, look at the forecast. 2024, 2025, 2026. It's like by 2026, it's gonna have considerable growth in comparison to the previous ones. So that's another good opportunity for the long term. You know, as long as we see these results coming through. You know, it's like we see a reporting that is similar or above. It's something very, very positive. I think the 15 analysts from Wall Street, they think the same. So this is how it works, you know, the stock screener of TradingView, how to find the best opportunities. So obviously we have here two, but we need more probably, you know. So we go back to the stock screener and we can adjust the performance. Here, for instance, we selected 25, but we can select 10, which is something more considerable, you know. Here we have right now a number of 5 different stocks, including the other 2 that we already analyzed. And probably the parameters are gonna be the same, you know. The situation of these stocks they're gonna be experiencing something similar, but that doesn't mean that it's bad. We're talking about positive net income, positive growth, a huge growth actually, and for the over the last 5 years, the performance is 91% or above, which is above the S&P 500. So we apply very important critical filters in order to assess the best investment opportunities. So this is one way to go. Obviously, you have to study the companies closely, but this is like the stock screening how it works. So I hope you enjoyed the video. Leave your comments below about what do you think about the stock screening. Do you think it's a good tool to find opportunities or not? Leave your comments below and see you in the next one. Remember to subscribe to TenUST to watch more content like this, and bye bye.